Let's be honest. Filing a health insurance claim can feel, well, super complicated, right? So today, we're going to pull back the curtain and give you a really clear, step-by-step guide to the whole process, from the moment you walk into the hospital to the day your claim is finally paid. And, this quote really nails it. Your insurance policy, it isn't just a stack of papers. It's a promise from the company to you. And making a claim, well, that's the moment of truth. That's when you find out if that promise holds up. So here's what we're going to cover. First, we'll talk about why that promise is so important. Then we'll meet all the key players involved. After that, we'll follow a claims journey from start to finish, decode what a TPA actually is, and finally, take a quick peek at a few other types of claims. Okay, let's dive right in with that big idea, the promise. At the end of the day, an insurance company's reputation isn't built on slick ads or fancy commercials. It's built on one thing, and one thing only, paying claims fairly and paying them on time. That is the absolute bedrock of trust.
Now, you might think a claim is just a two-way street, between you and your insurance company. But it's actually more like a play with a full cast of characters, and each one has a totally different role and, you guessed it, different priorities. Let's meet them. This chart kind of lays it all out. You've got you, the customer. You just want your claim paid and fast. Then there are the company's owners, who are the ones actually paying, so of course they need to manage costs. The hospital just wants to get paid for the services they provided. And watching over all of it is the regulator, making sure everyone plays fair. So managing a claim is really this delicate balancing act between all these different interests.
And this chart shows you the crazy financial pressure these companies are under. This loss ratio is pretty simple. It's how much money they pay out in claims compared to how much they take in from premiums. So look at insurer C with a loss ratio of 120%. Think about that. For every single dollar they bring in, they're paying out $1.20. That's why managing claims so carefully isn't just about making a profit. It's literally about staying in business. All right, now for the main event. Let's actually walk through the journey your claim takes, step by step from the minute you realize you need medical care all the way through to the final settlement.
So, right off the bat, you've got two main paths your claim can take. Cashless is the one everybody loves. It's super convenient. If you're at a hospital that's in your insurer's network, they just handle the payment directly. No fuss. With reimbursement, you pay the hospital bill yourself, and then you submit all the paperwork to get your money back from the insurer. This usually happens if you have to go to a hospital that's outside their network. But here's the thing. No matter which path you go down, cashless or reimbursement, every single claim goes through these 4 key checkpoints. It all starts with intimation, which is just a fancy word for letting them know. Then registration, where your claim gets an official number. Processing is when they do the deep dive, and it all wraps up with the final payment. Let's zoom in on that first step, intimation, because honestly, getting this right is so important. If you have a planned surgery or procedure, you have to tell your insurer before you even go to the hospital. If it's an emergency, you've usually got about 24 hours to let them know. And this isn't just some random rule. It actually helps them verify your case and get everything lined up, which makes the whole process way smoother for you later on. So, you've told them what's happening, you've sent in your documents, and now we get to it. The single most important question in this whole entire process. The processing team opens up your file, and this is the very first thing they need to figure out. And this is basically the checklist the claims processor has in front of them. They're literally ticking boxes. Is this person actually covered by the policy? Yes or no? Was the hospital stay longer than 24 hours? Is this related to a pre-existing condition? Some policies might have a 2-year waiting period for, say, a knee replacement. They go through this list one by one to answer that one huge question. Is this claim payable? This is where most rejections happen, so it really, really pays to know your policy inside and out.
Okay, so let's say your claim gets the green light. Awesome. But how do they figure out the final amount you're getting? This is where people get confused, because it's almost never the full hospital bill. First, they start with the total amount. Then, they subtract things the policy doesn't cover, like, say, special meals or toiletries. Next, they apply any limits in your policy, like a cap on how much they'll pay for the room. After they check that against your total coverage and subtract any copay you might have, what's left is the final amount the insurer pays.
All right, I am sure you've heard this acronym thrown around, TPA. But what in the world is a TPA and what do they actually do? A lot of people get this wrong, thinking they're part of the hospital, but they're a totally separate, really important link in this chain.
Okay, here's the absolute number one thing to get straight. The TPA works for your insurance company, not the hospital. Think of them as a specialized partner that the insurer hires to handle all the day-to-day stuff for your health policy, from sending you your ID card to actually processing the paperwork for your claim. And believe me, their role is massive. Pretty much any time you interact with your health insurance, you're probably talking to the TPA. That ID card in your wallet, that came from them. The 24/7 call center you phone with a question, that's them too. The network of hospitals for cashless service, they manage that. They are your main point of contact for the entire claims journey. So we've been talking a lot about standard health insurance claims, because that's the most common one, right? But these same ideas apply to other kinds of policies too. So let's just take a quick look at a couple of others. But they do have their own little quirks. A personal accident policy, for example, usually pays out a fixed amount. So the whole claim process is about proving that the injury was caused by a legitimate accident. And with overseas travel insurance, you could be claiming for anything from a medical emergency in another country to a lost suitcase. These often involve coordinating with international assistance companies to get you help right where you are. And that brings us right back to where we started. Your insurance policy is a promise. And understanding how that promise gets tested, from who's involved to the actual step-by-step process, is your single greatest asset. It can turn what feels like a stressful, confusing time into something you can actually manage. So the question is, now that you know how the whole thing works, you're ready to make sure that promise is kept right